Okay, what's up, everybody? So, this is going to be a market review of today, the 7th of October. Coming into the day, I was bearish, so let's kind of discuss it. All right, I did take a trade, got 60% of volume off here of one of my trades. Second trade, I did not take, and I'm gonna actually go through that one because, in my honest opinion, that was the one that I honestly should have taken, and that would have netted me a really good amount. But you know what? It's okay. This is where you live and learn, and you move on, right? So after taking my last break, my trading style is changing. You know, I took some time listening to some actual traders, some hedge fund guys, and listening to the way in which they trade and how they trade and positions and where they look to take profits and whatnot. I think I've been selling myself short a lot of the time, and I think at some point, maybe not right now, but in the future, will be kind of moving to a higher time frame, kind of not necessarily bias, but profit targets or full volume profit targets. So yeah, um, let's kind of go through what I was looking at for today. So something really interesting that I noticed this morning was, I talk about this on the live stream, is we were making constant higher highs. Now, the thing about these higher highs that I find very interesting is we're not closing above. So we have this one, we don't close above. We have this high. Oh, come on now. What are you doing? What are you doing? We don't close above. We have this high. We don't close above. And finally, we have the high from today, where we do, in fact, close above. But it's not a very convincing close, especially with the following candle at 9 a.m., right? And how the 9 a.m. candle kind of reacted. So I say all that to say, coming into the day, I was primarily bearish, looking for something like this or even something like this, right? So during the session, I was looking for shorts. Coming into the day, that's pretty much all I was looking for. So let's go down to a 15-minute real quick. And on the 15-minute, what do we have? Or what can we see? We see that from 8 o'clock, we pump all the way up for 9:30. Sorry, to 9 o'clock. 9:30 gives us this weird-looking doji. To be honest, it kind of threw me off a little bit. And I was kind of like, are we going higher? Are we going lower? I'm not 100% sure just yet. Price action wasn't really telling me what was going on in a lower time frame, 100%. And I got very cautious today because of how the wicks were kind of wicking. You have these kind of crazy wicks here, 9:30, 9:45, 10 o'clock wicks were not the cleanest thing. You'll see on the lower time frame, not the cleanest again. So I'm gonna erase this. I'm gonna erase this because it's in the way. That's why of how I'm seeing the chart. So I just want to kind of get rid of it. I'll leave that one on. Okay. So we get this, and looking at this, I'm like, all right, what are we doing from here? If we're going short, I wanted to see some form of sweep liquidity for us to go short. If we're going long, same thing. I also came to the conclusion that I'm primarily looking short because we made all-time highs already at 9 o'clock this morning, failing to close above previous all-time highs on the hour chart. So I was like, all right, I'm looking short. Come into the 5-minute, and I just see this. This is just straight up price, right? There's no selling candles at any point. For me, that immediately lets me know below there is liquidity, right? So that's the first area of liquidity that I was looking at. Second area of liquidity I was looking at was the London low, which is pretty typical. I like targeting London low. It's done me well in the past, and it will hopefully continue to do me in the future. But there's a third one, which you see. I don't know if you see it on the 5. Yes, I think you do see it on the 5. I know it's on the 1. Yes, on the 5. We have these equal lows in here. So I have 3 areas of liquidity. But if price presented itself, I knew where I was going with price. All right. So I had first area, which is after the liquidity. I expect some type of reaction. We actually didn't get it. We had equal lows, which is obviously going to be a draw of price. We didn't get it. And lastly was the London low. Cool. So that's how I've shaped up my day. So let's go on to a 1 minute and kind of go through how I saw the chart, and then also go through the missed trade, right? Because the missed trade, man, everything was right with it. There was nothing wrong with me taking that trade. But I just chickened out mainly because of how the 1 minute was looking at the particular time. So let's go through kind of open, right? So open 9:30. We got this crazy looking doji candle, massive wick. And I'm thinking, all right, cool. We got this wick. What can I see for me to go long or short? Absolutely nothing. Okay, cool. Price pushes up higher at 9:36. Kind of gives me nothing again. Push lower, lower, lower. I was, again, being extremely cautious. I wanted price to come off of here, start to break there, and then for me to be able to look for an entry. As you can see, price very much respected that. 1 tap, 2 taps, 3, 4, 5, 6 taps. There's no way I'm taking that trade short. Makes absolutely no sense. Got burned on that a couple weeks ago. But I did know that this was a floor. And I knew that, okay, we probably want to go a little bit higher from here. But ultimately, I need to find somewhere for me to go short from. So I see price aggressively push up, sweep this high, and it gave me a beautiful inverse. All right. Boom. Inverse. So for me, I was like, all right, bet. This is a trade. This is my first trade of the day. I hopped in pretty much at the open of that candle. Yep, you can see that there. Hold on a second. 1 second. Make this a respectable side. Stop above the high and target. Well, whoops. That was my overall target. This one here was my overall target. But this was my first one. This was my first target, which was just a low. And that was just a way for me to take some partials off the board, right? And just take some partials off. And yeah, it worked out. It worked out pretty well. First target smash, we came back up. And obviously, I was out break even after that. So that was the first trade. Good first trade. Now for the second trade. And I'm going to erase this real quick. Hold on. This was ultimately my target. And this is now irrelevant. Cool. So now we have a very interesting kind of dilemma here. Which is, I know that we've swept buy side here. I also see that we have this internal liquidity that was taken. And I see that we have 2 inverse FEGs available. Sorry, 2 FEGs available, right? We have this first one, very tiny, not the best. I can't even pull that over really, but I'll try my best. Something like this. Not the best, not something I wanted to take. It didn't make a lot of sense, but I could have taken it, and I would have gone break even at this point. Why this point? Even though it's not a liquidity point or a structural point, if it is price wants to continue higher from here, or because of this leg, where are we going to go higher from? Well, the FEG is the most logical area. So that could have been a break-even point. It wasn't. But what I was looking at, and what I thought was probably the best, well, not necessarily the best opportunity, but the one that played out the best today, was in here, right? I was looking at this and I wasn't ready to take it. I was like, oh, are we gonna close? I hope we don't close. I literally said that in the trade because I didn't really want to take it. Because my model says that I need to take it if it closes, but I didn't want to. And lo and behold, the next candle did, and I didn't take it either. Now, for this trade, once we came back up into here, I was like, okay, this kind of makes sense to take. We're failing to go higher. Let's just do this and put my stop above the candle. So, where I put my stop is the first candle that's above the FVG or the inverse. Any part of that candle would be where my stop goes. I usually do 3 ticks above that. So that 1, 2, 3. So something like that. All right, it was 22. So it's 23 here. So that's how I saw the trade, and that's what I wanted to take. As you can see, I didn't take it. I honestly chickened out, and I need to go back and watch the live session to see why I didn't take it. But I know my hand was over this sell thing. I was over it. I was like, oh, am I gonna take him or not? But I do know that if I did take it, here's something interesting that's happening. When I take trades, I don't close out early. All right, I just let it do its thing. What I'm finding now is for me to press the button. Me pressing the button is turning into a little bit of an issue. And I think it was an issue today, primarily because I already got a win. I was up on the day, and I didn't want to risk being down on the day, even though I would have been super up on the day on this particular trade, right? So, whoa, don't want that. So that's how I kind of saw it. And so this would have been the entry somewhere in here. Stop is above the candle that broke through the inverse. Let me just kind of give another example of how that kind of works, right? So, for example, if we were to use this as a FEG, we wouldn't, because we'd have to use the whole thing. This is 2 candles, right? But this is the first candle that kind of comes through. So I'd have to put myself above there. That's just a safe point in how I trade. So yeah. Now, looking at this, we have 2 possible scenarios. One is this is very clearly the manipulation, right? And this was been target. Now, I was targeting this low, which is the low of the 5-minute. The low of the 5-minute that was pushing up. Right, this low, which is the only liquidity point. That was my target, or my first target, from the first trade. And I was like, look, the target hasn't been hit. Why not just stay and see what happens, right? And as you can see, we pretty much, we would have gone break even at this low, which is exactly what happened. And then we hit the first target, pull back, still would have been in, surprisingly. And then we roll over all the way down. So yeah, that's definitely a learning experience, because everything's telling me to go short in that moment, but I didn't. That definitely has a bit to do with emotions and whatnot, not to do with the system or the analysis, because there's nothing wrong there at all. Everything in the analysis is telling me short. Only thing that I was a little concerned about was how choppy it was. But I didn't really care how choppy it was after this. This one here is honestly an A+ setup for me, because we sweep internal liquidity. If we swept, an A setup. If we swept external liquidity, it would have been better, but that would be A+. But internal liquidity, sweep, displacement through the inverse, entry on the close of the candle, which is this one, on the open of this one. And targets were fine, no issues. Something similar here, right? So, internal liquidity, sweep of internal liquidity. We did have this inverse a little bit lower in the leg, unfortunately. But we do have this inverse. Should have taken that inverse 100% on this candle. It could have been this low, could have been this high, doesn't matter. I mean, it could have been like this. Still would have been a good trade. Stop where it needs to be. Um, yeah, and then look for targets, first target, second target, as I described. And if I wanted to stretch it out, I could have gone something like this. But I'm not a very big proponent of stretching out trades, even though on the pretty much the same candle or the candle right after, we would have smacked it. It's a really good learning experience for today. Now, something else I was thinking about today while this kind of ran was higher time frame trades, right, or trade ideas. Like, I look at this, which is clearly the last push up before we moved lower, right? I don't know if there's a change in state delivery here. Let's just check real quick. Whoa, my bad. Hold on 1 second. All right, let's just check real quick on the change in state of delivery, which is here. Yeah, okay, cool. So we do have that change in state of delivery. So on the 15 minutes, some people are going to take this, right, off the order block. On the retest, set the limit. I don't exactly know where they put their stop. But in all intents and purposes, 2 standard deviations, and you can see price comes into that 2.5, and gives us a reaction, right? So I want to be able to hold trades longer in this type of manner, but also be entering on a lower time frame, right? On the 1, 2, 3, really and truly on and 5, but really and truly the 1. 1 second. What the hell is that? Okay, so that's how I want to be trading. Long term, right? And whether that's the same type of entry that I just did over yonder, which is 1 second, which is this, right? This is the trade, short, something like that. Well, actually, if we really doing it how we're supposed to be doing it. Well, no, here, that's where my trade is, right? Something like that. And then I'm looking to target those 2 standard deviations all the way down here. Like, on a 1 minute, that was crazy, right? It's a 15-hour trade, which is pretty crazy. But that's how I want to be trading in the future, right? Or even if it is, I look to target these equal lows in here, right? These equal lows, relatively equal low. Still looking at an 8-hour trade, and it's very possible to do, and this is a 30-minute trade, 7-hour, 8-hour, whatever. So that's what I'm looking to do, or to get into in the higher time frames. At some point, it doesn't necessarily have to be right away, but I want to be cognizant of the fact that is where the bread and butter is going to be, and that's where the real money is, right? So yeah, that's pretty much it for today. Until tomorrow, I will probably be live tomorrow again. But I do have some things going on this week that won't allow me to be live every day. So yeah, I'll see you on the flip side.